So many misconceptions regarding capital gains tax in Australia. It's a bit of a buzzword right now. Being a house flipper myself, I want to debunk some of these misconceptions, hopefully clarify a few things for you guys so that you can make better decisions moving forwards. Actually work out if flipping houses in Australia is going to be feasible for you and whether it's going to be worth the time, investment and the money put forth to be able to flip houses profitably in Australia. The reason I wanted to go into depth and make this video is because there's so many misconceptions around this topic, a lot of misinformation, and there's a lot of people out there spinning absolute garbage. There's a lot of people that just really think house flipping is not viable in today's day and age purely for the tax implications. I'm here to share with you right now, I would not be flipping houses full time if the government was taking 50% of my profits on every house flip deal that I've done. If you structure it the right way, you do it through special purpose vehicles and different entities. Look, you can still do it in your personal name. Banks aren't going to like it though. They're not going to want to service debt for flippers and things like that. That's why utilizing different structuring and getting the right advice, depending on your situation, can guide you in the right direction, allow you to flip houses and do it profitably without paying absurd amounts of tax on your profits. Quickly just want to add a disclaimer here and let you guys know I'm obviously not a financial advisor. None of this is financial advice. I actually got a lot of this stuff through the ATO website and through ChatGPT. Those are the key resources I've utilized to get some of these misconceptions, and today we're here to debunk them for you. But let's start with the actual definition of capital gains tax based on what is actually on the ATO's website. Capital gains tax is the tax you pay on profits from disposing of assets, including investments such as property, shares, and crypto assets. Although it is referred to as capital gains, it's part of your income tax. It's not a separate tax. A lot of people think that it's some extra thing, its own independent thing, okay? Based on that and just reading that, okay, my understanding of what that actually means is gains tax is basically added onto your income tax. Probably the number one thing that comes across my desk and that gets commented on a lot of my videos with regards to flipping houses and capital gains, first thing people will say is, why would you flip a house in Australia? You're going to be liable for these massive capital gains tax bills. Firstly, okay, there's a massive misconception. People just think, they hear the word capital gains and they think instantly the government's taking 50% of the share. That could not be further from the truth. So if you're buying a house in your personal name to flip and make a profit on, it's up to the wording and things like that. There's a few gray areas with it, but it really depends what your intentions are when you buy that property. You're buying it to flip, or whether you're just buying it as an investment, whether you're buying it as a PPR, principal place of residence, and circumstances change and then you sell it. It's really dependent on whether you're actually liable to pay capital gains tax or not. Hypothetically speaking, have a property that you buy with the intention to flip and add value to, okay? Or even if it's investment property, say you sell it 6 months down the track, the ATO is going to add any of the net profits on top of your taxable income. So let's say you're on $100,000 a year salary and then you buy a house with the intention to flip. Let's say you make an extra 100K net profit on top of that. Basically, from my understanding, all it means is your tax bracket is pushed up from $100,000 to $200,000. You're being taxed on $200,000 instead of the $100,000. That 100K is your capital gain. There's other misconceptions out there where they go, okay, so let's say in the same scenario, you buy a property for 500K, you sell it for 700K up here. Some people think you get taxed on the full $200,000, but that is not true. The reason why that is because you still have to minus off all the expenses that were accounted for to actually get that property from 500K to 700K. The ATO actually lets you deduct stamp duty, legal costs, holding costs like interest and things like that, as well as your renovation costs. Let's say you've got $100,000 of receipts and things that you can actually claim against that. You're going to pay tax on the actual net profit of $100,000. Another misconception is you always have to pay capital gains tax when you sell a property. There's one instance that I know of that this isn't true, and it's if it's a principal place of residence. So you buy a property as a principal place of residence and you're residing in that property, you go to sell it a few years down the track. As long as your intention going into it wasn't to buy it to flip or to add value to or whatever, you can sell that property at the end of it and you actually don't pay any tax at all. Okay, so we've talked about a couple of the different misconceptions, a couple of things that people get confused with regards to capital gains tax in Australia. I'm going to speak about some different ways that you can actually get around this. All those ways that I just spoke about were if you were buying the property in your personal name. If you're buying in your personal name, all it's really doing if you're buying a property to flip in your personal name is it's bringing your tax bracket up to whatever net profit you make on that flip. If you want to be able to do it at an actual even lower marginal tax rate, okay, as I said, I'm not giving you advice on this. Go and speak to an accountant. But you can use other structuring, okay, like companies and trusts. There's some ways that you can actually purchase a property in one of these entities, do the project, account for all your expenses, sell the project, and then pay an even lower marginal tax rate. Now, I suppose the caveat to this is there's other ways that you have to go about getting financing to be able to make these projects work through entities, but with the right structuring and the right advice from the right professionals, you can minimize your tax bracket and get it down as low as possible so that you're pocketing as much money as possible. If this video has been of value to you guys, please hit subscribe, like the video. If you got any questions, please comment on this video. I'm literally getting back to every single comment on these YouTube videos. My job here is to point you guys in the right direction and show you how you can actually profitably flip houses in Australia, potentially even step into it full time one day like myself. Have a great day, guys. Thanks for your time.